My name is Asad Ahmed. I'm the moderator for this panel. In terms of background, I've been in banking for about 30 years, a little over 30 years, in the Middle East and in Canada. I was the CEO of National Bank of Fujairah here. And then I discovered Kenya in 2011. I went to Kenya as the CEO of Gulf African Bank, which is Kenya's first Sharia-compliant bank. And so I discovered I'd been dealing with Islamic banks from the outside, but this was the first time I actually worked within an Islamic bank. And discovered what I liked about it, discovered what I didn't like about Islamic banking, and we'll share some of that today. And my second discovery in Kenya was M-Pesa in 2011. And in terms of M-Pesa being a way of life, and while today mobile banking, mobile wallets, all that good stuff is an extremely hot topic in the fintech industry, in 2011, even in the West, it was very nascent. And just to put it in perspective, not quite our topic, but just to put it in perspective, in 2012, 50% of all the mobile transactions were done in Kenya. This is global stuff. So that was the state of Kenya and my discovery there. There's lots of things to talk about in Islamic banking, and the reason that we chose this topic of whether it's reaching its potential or not was having been into Islamic banking for the last 4 or 5 years, been a speaker and attendee of many of the Islamic conferences in Africa and the Middle East. And you know what? Year to year, nothing really changed. And I went and started looking at some of the agendas of the last 3 or 4 years and some of the speakers and thought about it. And it's the same thing. The issues of Sharia scholars, the issue of how growth is happening, the issue of penetration. Even some of the presentations, I tell you, were exactly similar. So I began to think that, we really need to try and see if we can unravel in whatever time we have today as to why we seem to be stuck in a rut in terms of Islamic banking. Yes, we say we've grown at 17%. Yes, we say we've grown at 10%. But the numbers that we're coming off, the base figures that we're coming off, is very, very low. And the estimates you get $2 trillion of industry, some would say 1.8, 2 million. These are all good numbers, but is Islamic banking really making a meaningful impact in areas where it should? Why do Islamic bankers generally the first thing they want to do is to see how they can replicate a conventional instrument instead of seeing whether it's really good or not? Why do they want to, what drives them? This morning, a lot of conversation here was about venture capital and equity. And one common theme was risk returns are good in Africa, etc. But the common thing was, what is the return? And one hypothesis I will throw out, and we'll maybe talk about it, is my personal view is that if you want to do Islamic banking, and I think more of it in ethical banking as opposed to Islamic, if profit is your primary mover in terms of what you want to do, then I don't think you will ever get it right. It can certainly be part of what you want to do, and that's okay. But if your fundamental reason, if you're doing Islamic banking, is to make money, then I think you may not be able to get it right. And I've just seen the chairman of the CBK come in as well, so we'll talk a little bit about the regulatory structure and why certain environments, in certain countries, Islamic banks tend to do better as opposed to the others. So let me introduce my panel to you. Atiq, I've just introduced. Atiq is the senior partner of Anjawala & Khanna and also the managing partner of ALN. Been in Islamic banking business from day one. I think they're the leading law firm which has done all the documentation for the 2 Islamic banks that have come up in Kenya, and then a bunch of other stuff separately. Next to Atiq is Mona. Mona Doshi is also part of ALN, and she's been involved in a number of transactions. She's a partner of ALN in Kenya and been involved in a number of transactions related to Islamic banking. And Hani Ibrahim is with Q Invest, and he is the head of debt capital markets at Q Invest, responsible for the syndication and Islamic capital markets business. In his role, he's advised and structured numerous prominent transactions for sovereign, corporate, and financial institutions across Qatar, the GCC, and Turkey, in addition to being an instrumental part of the team that set up and developed QInvest's investment banking franchise. Prior to QInvest, it's Emirates NBD and DTZ Corporate Finance. Hani is a CA with a BSc Honours and MSc from University College London. So thank you, folks, and I'm going to sit down because it's probably easier there. But maybe I'll start with you, Hani, before I sit down. What are your views in terms of Islamic banking actually trying to get to the unbanked Muslim population? And what could be the ethical drivers for Islamic finance?
Sure. Thank you very much for that, and thank you everyone for coming to the session. I think I'll start off with one comment, which really is that's okay. I would disagree with my esteemed moderator in terms of the profit motivation for Islamic banking. I think that the profit motivation has to be there. Whether it's sort of a core motivation, or the core motivation has to be there, whether it's replicating conventional banking or not is a separate debate. But I think to answer Asa's question, in terms of Islamic finance and Islamic banking, particularly in Africa, perhaps we need to look at the consumers of Islamic banking and the suppliers of Islamic banking. So who are the consumers? I think on the retail side, there is, as you said, a large mass of unbanked or underbanked population. That's a point that's been raised a number of times, not just in relation to the arguments for Islamic banking, but just generally a concern of the lack of access to banking for people. I think that initiatives such as mobile payments, etc., are helping to bring people into the financial system. But one of the things for some people that's hindering it is the thought of banking not being to their moral standing or ethics, particularly for some Muslims who want to stay away from earning interest, paying interest, etc. So I think there is certainly, from a retail perspective, a large demand in terms of number of people that Islamic banking can cater to in and across Africa. But it doesn't have to be just for the Muslims. You look at other markets around the world, so you look at where I'm based in Qatar, you look at UAE, Islamic banks don't discriminate who their customers are. They will welcome whoever it is. And the reason for me to make the point that profit has to be at the core of a success of Islamic banking, in that same manner, good customer service, good products, competitive products have to be at the core of success of Islamic banking. So if you look at an Islamic bank in the GCC, they will offer pretty much the same products to the retail client that a conventional bank would. And as a result of that, it's not just Muslims who bank with these banks, it's everybody. So Islamic banking has that potential. The base that we start from is certainly very low. It has been, as an industry, that industry base has grown. It's still got a long way to go, but particularly in Africa, it is extremely low, and there is a long way to go. So I think from a retail perspective, there is certainly demand, at least from what I've seen. From a wholesale banking perspective, I think what Islamic banking offers, it's less of a, there is demand from the business population who also happen to be Muslim initially, but the bigger demand is to seek out and access a wider pool of liquidity or an alternative pool of liquidity. So there is liquidity within Islamic banking. The trillion that we talk about, obviously not a lot, not all of that is dedicated or will go towards Africa, but there is that liquidity. So sovereigns, financial institutions, large corporates can have the option of accessing that liquidity, and we've seen that. So last year we had South Africa issue the first sukuk, dollar sukuk, which is a Islamic bond effectively, out of Africa. So they access that market. We've seen a number of other sovereigns who've accessed it in local currency. So we've had Senegal, we've had Nigeria, a state out of Nigeria, we've accessed it. I think Sudan's been active in raising financing in this space as well. We've got a number of other sovereigns looking at this space, particularly North Africa. So there's been talk of Tunisia, Egypt, Morocco, etc., looking at this space. So it's for them, it's more accessing a different pool of liquidity that is out there. So I think from a demand perspective, there is sort of demand there.
Thank you. I'll come back to the profit bit later. But I think I just wanted to get your view, and you've been on both sides. You know, you've been here 2 years, 3 years now, 3 years. So why are we not seeing a lot more of the Gulf institutions, Islamic Gulf institutions, going into Africa? I mean, DIB is one exception, and I think QNB in their share with EcoBank. But with these kind of returns that people are seeing in Africa, why are they? And they're, you know, all the banks here in the GCC, most of them are really growth starved. They have grown in their markets. They don't know where to grow, but they're still not seriously looking at Africa. I mean, do you have?
Yeah, I mean, I suspect it's partly the reason that even the, you know, for example, we had the PE fund discussion this morning. Overall, I feel that, in fact, I've been here 6 years. So I think when we first opened the office, and I'm talking about investment generally, not particularly investment in Islamic finance, there was talk of Africa here, and then progressing 2 years later, 2.5, 3 years later, we saw, okay, we want to get our feet wet, but don't know quite how to do it. And of course, I'm generalizing. So we'll invest in a fund that's investing in Africa, because, you know, the GP will do all the work, etc. And now we're seeing, I think, in the last 18 months, a year, direct investments. Okay? And now this is not Islamic finance. I'm just talking about generally, and I suspect that, you know, it's the same point that I think, you know, as far as the Islamic banks are concerned, in this part of the world, I think it's somewhere a little bit too far, probably in terms of risk, you know, and the perception of risk. And again, that was talked about. You know, I think the general view is that probably is easier money to be made in other parts of the world, at least from once you balance risk into that equation. But as I said, that is changing. I mean, you know, Hani and his colleagues and us are talking about certain transactions in other parts of Africa, and it's interesting that sort of, you know, general perception and view that, you know, actually it's, you know, there is potential to do things here is happening. So I think that's one. The other thing is that, you know, for the Islamic banks that have ventured into Islamic countries, and let's not forget, it's not this part of the world, right? So you take Indonesia, Malaysia, many of the other countries which are very substantial in terms of numbers, Bangladesh, Pakistan. It's automatic because the sort of regulatory regime, the size, the market, the understanding of these products is sort of generally there. And of course, in many of the African countries, that doesn't apply. And even if they have large, so if you take sub-Saharan Africa, even in the countries where they have large Muslim populations, actually when it comes to financial inclusion, the knowledge is probably zero. Okay, so people just don't understand what this means. And it's interesting that, you know, when you were in Kenya, and, you know, the CEO of the bank of Gulf African, and, you know, many customers, when I was talking to some of your managers, you know, the general view was that it's a very expensive mode of financing. Okay, and so, you know, people also felt that is, you know, compared to conventional banking, it was actually very expensive. And I suppose finally as well, because of some of the regulatory challenges, because the laws in many countries are not, and I mean banking laws, fiscal laws, etc., are not designed to facilitate Islamic finance transactions, the cost to doing business for the banking industry just goes up. So if you're launching your normal trade finance, conventional trade finance, as opposed to Islamic trade finance, just the understanding, the amount of money you're going to put into staff, expatriate staff to be brought into the country. So all that basically, feeds into your cost of operations. And I suspect these are some of the challenges that banks are facing.
Holding it back. So Mona, what do you think is holding back the regulatory framework from embracing or sort of setting up an Islamic one on the side?
Well, as far as Kenya is concerned, I would say that the regulators have shown that they wish to make changes to legislation, the legal framework and the tax framework, and hopefully it's a matter of time when all that will happen. Legislation does need to change because currently in Kenya, it's conducive for conventional banking, but not for Islamic banking. So there's a range of products that cannot be made available because they would contravene the laws. And Capital Markets Authority, the Treasury, they've all indicated that they wish to make these legislative changes because in conventional banking, you are supposed to pay interest on savings account, and that's not allowed under Islamic banking. So when a bank does open an Islamic window, they would need to get exemptions from the certain provisions of the Banking Act. So in that manner, legislative changes need to be made so that it's conducive for Islamic banking. And it's a matter of time when regulators need to get together to make these legislative changes. The most important is also the tax changes because under Islamic banking, it's more participation banking and investor-entrepreneur relationship or a seller-buyer relationship rather than your normal creditor-debtor relationship. So when you look at those transactions, it involves a sale of land or a lease of land, which attracts VAT where it's a commercial lease. It attracts capital gains tax when a profit has been made. It attracts stamp duty if you're looking at a sale of land. And this makes the pricing of Islamic finance very expensive compared to conventional banking. So when you go out to market, for example, to non-Muslim customers, it needs to be more attractive so that they would want to use Islamic finance as a method of financing. So until all these changes are made, the case for Islamic finance is not as strong. There is a conference that is scheduled by the East African Business Network in December in Nairobi, which we are partnering with, Anjarawala and Kana is partnering with. So we wish to bring together regulators and key players in the industry so that such changes can be made to the laws, so that, for example, the National Treasury has indicated that in 2016 they wish to launch the sovereign sukuk. The Cabinet Secretary of the National Treasury, Honorable Henry Rotich, has indicated that several times, but it can only be launched if these legislative changes are made. And that is one of the reasons of having this conference in December, to try and see if these changes can be brought about.
Sure. Sorry, I was just going to add that, I mean, the changes have to be made, but the changes are not unknown changes. These changes have been well done everywhere else. So it's a set of changes, but it's nothing new that needs to be invented. So it's just a question of commitment and process.
Exactly. I think the regulators now really need to sit together, and if they are keen, as they have said many times in the past, then it's a matter of actually passing through these changes. Hopefully, we will see these changes in the near future.
Sorry, before I move on, has the documentation been tested in courts yet, in Kenyan courts, for example?
Asad, no, it hasn't actually. I guess, again, it's a matter of time, but as yet, there is no case law in Kenya on Islamic finance.
Oh, okay. Sorry, Atik, did you want to say something?
The challenge that we find, and I don't want to sort of make this too legalistic, but the challenge that we find is that, you know, because you've got to work with non-Islamic laws,
Yeah.
the drafting of documentation and the creation of legal obligations does become a bit complicated.
Sure.
But you essentially have to weave around laws and precedent which would otherwise set aside those documents. So, and it just goes back to the point we discussed earlier about cost. But you are right. I mean, I think if as long as governments are genuine about wanting to make changes, then of course it is not that complicated to bring in a few key changes, and that's all it is. It is a few key changes that's required. So, the United Kingdom had its first sukuk launch in 2016. There is about 200 million. It wasn't a big issuance, but very interesting because they wanted to set the scene.
Correct.
And they made parliamentary changes that were required to local laws to allow that to happen, and it had been a very successful sukuk launch in the UK.
No, it was, and I think Baroness Warsi was, very committed to getting that done, and I think that's what drove it. Hani, what about some of the liquidity instruments that you see, the challenge of finding liquidity instruments within
Sure.
Sharia-compliant banking?
Sure. It is a challenge, certainly. It is a challenge, and I think, we mentioned sukuk, and that's kind of really the only option for people, so that's a big challenge. But I think, specifically when you look at Africa, I think even before you get to the challenge or the limitations around liquidity management for Islamic banks and liquidity instruments, I think we've had explanations around the laws, the rules, the regulations, etc. But it is amazing how that contributes to the Islamic banking, Islamic finance being far more expensive in the early stages. So you really do have a cost of being Islamic on products. But I mean, if you look at, and I've looked at laws in a number of countries. So we were involved in the first sukuk in Luxembourg, which was last year, in Hong Kong, which was again last year. There was the one that was mentioned about the UK, South Africa. All of these required changes in laws. So a simple financial transaction which involves buying, let's say on a retail basis, buying a car and then giving it to a consumer to use over a 5-year period where they can pay it down, that cannot be structured in a lot of places as a lease, unless if you're licensed as a leasing entity. It is far easier to structure that as a loan. And that is the challenge that Islamic banking faces. So, and it's not just a car; it's a house. It's it's various other products. So if you take that and you combine it with the very early stage nature of Islamic banking in Africa, where invariably the banks will be smaller and therefore their cost of funding will be higher. They can't compete with the large national champions. You get to a stage where Islamic banking is more expensive. Now, this is what we saw in the GCC a number of years ago. Now that cost is being equalized to the extent that, and the sukuk business is something that I manage. We've been able to issue sukuk instruments for people who've already got bonds out there at a cheaper price. So Islamic banking can be cheaper. And this goes back to that whole profit point. I mean, Islamic banking can be economically better than conventional banking if it gets to that stage. But in some markets, it's more expensive. That's the reality. I think that the evolution and the growth has to get there. And one of those things is liquidity. So managing liquidity, having liquidity available helps drive down the cost and helps increase the efficiency in the market. And I think that it's a bit of a growing pain scenario. You have to go through that to get to that stage, but it does eventually get easier. In terms of where will that liquidity come from, I think you mentioned earlier why investment from other countries, from outside, so FDI into this sector hasn't been that prevalent or that forthcoming. If you look at Islamic banks, particularly the GCC-based Islamic banks, they're able to get growth far more than the conventional banks domestically. So the balance sheets of these entities are already growing anywhere between 15 and 30% per annum in terms of growth. They're making return on equity of well above 10%, so 15%. Sure, returns might be higher in Africa, the balance sheet growth might be higher, but when you look at that on a risk-adjusted basis, the motivation hasn't been there. Now, when you get to a stage where the Islamic banks here are large enough, they can then try and capture the next element of growth. And I'm sure Africa will be quite high on their priority list.
At some point. I think what I'll do is make just a couple of comments and then invite.
I was actually going to do, because our panel is small, I said, if you don't mind, I was actually going to put a question to you.
Sure.
If you don't mind.
That wasn't part of the plan.
No, because you see,
Sure.
you have been the CEO of a Sharia-compliant bank
Sure.
for a number of years in Kenya. So I think it would be interesting to get your insight, because you obviously worked in the industry. You're very familiar with all the points that we are raising. I mean, what's your view in terms of the challenges and the opportunities?
Sure. So I think the opportunity generally, when I went to Kenya in 2011 and I was sort of considering the job, and when I met a lot of people in Kenya, Muslims and non-Muslims, the opportunity is seriously tremendous. It's absolutely tremendous. Challenges, of course, the regulatory framework is a challenge. Market awareness is a challenge. Knowledge about Islamic banking as not being restricted to Muslims and really for a broad audience, that is a challenge. Products were a challenge. And one of the other bigger challenges that we found, which I think is gradually getting resolved, was the Sharia scholars. So the Sharia scholars in all the new markets in Africa have not dealt with the commercial side of Islam. So they've dealt with the fiqh, they've dealt with the religious side, but they've not dealt with what they call, the worldly things. What is right in terms of commercial transaction. So there was a very steep learning curve if you wanted to bring in Kenyan scholars up to speed as to what may or may not be acceptable. Of course, it differs from bank to bank as well. It does too even here today. Some banks will accept a certain form of transaction, others will not. There are banks, Islamic banks in the GCC, which don't do credit cards because their Sharia scholars don't allow it. So other banks do it quite happily. So what we ended up doing in Gulf African Bank was actually invite a renowned Sharia scholar from Bahrain onto the board. And he has been involved in a number of transactions, a number of banks. So that brought the general level of awareness up. And we had a lot of conversations at the Kenya Bankers Association and with the CBK of whether there should be a central body of Sharia, central body of Sharia scholars as there is in Pakistan and Malaysia. So those were some of the challenges. But the opportunities, I think, as long as you can get the message right out, as long as you can get it sent out in a priced correctly, I think the opportunities in the region are huge. ICD has a number of investments in West Africa, in Senegal and in Niger. But there again, they're not making a meaningful impact with the investments they have, which they've done through Tamwil Africa. And I think one final point that I'd like to make is in terms of reporting, especially for the for conventional banks which have windows, Islamic windows. When they report their financial statements, they don't report the Islamic or the Islamic side separately. It's all consolidated. And there have been many conversations as to whether the funds have been properly segregated, both on the asset and liability side, and does the segregation go right to the top or not? Where does it actually cross into the holding? So, and my submission when we get to Africa, when we get to December, would be that needs to be reported separately on the financial statements. You must, because that's a trust that you have with the Islamic banking customer. He's come to you because he believes that, you know, his faith or whatever is allows him to do that. And I think that it's part of the repayment of that trust that you indicate to him that your funds have been kept segregated. This was introduced in Pakistan, I think, about 4 or 5 years ago. And all the conventional banks which have windows, and Pakistan's largest bank, Habib Bank, is now the second largest Islamic bank by its size. Everybody reports their entire balance sheet with the full disclosures separately as part of the consolidated statements. Any final comments, Hani? I think we can then open it up for questions. Any easy questions? There is Islamic, South Africa is another market where Islamic banking is coming up. Al Baraka have a number of locations, both in West and South Africa, West and in Northern Africa, where they're growing. The panel may have a better sense of what the hotspots are, but I think wherever the frameworks will be in place faster, those will become hotspots. But you know,
I was going to say, I was going to ask Hani actually, because you know, because of his of where he's based and the institution he's with, that I think, and I wanted to add the one more question, Hani, for you in terms of, again, because of, you know, the institution you're with. I mean, are there any plans for capacity building in terms of what you invest as part of his portfolio, in terms of building knowledge and giving guidance to governments? Because it seems to me that that is definitely an investment worth making, to convince them that actually, because you talked earlier about, you know, this large pool of capital in this part of the world, looking for better returns, and it seems to me that the logic is obvious that if you can capacity build and make people understand, then, you know, there is probably a good chance of that capital being deployed locally on the continent.
I think, so my view, and relative to both of those questions, you've got to look at it in two separate segments in a way. So a lot of the work that we've done, or I've done, it revolves around wholesale funding. So it's the sukuk funding for governments, for financial institutions, for large corporates. That is, in a way, totally independent of where there are or are not Muslims. South Africa being the first country to issue a dollar-denominated sukuk, which is I guess the pinnacle of wholesale funding in Islamic finance, with a very small, relatively to some of the other African countries, very small Muslim population. So from that perspective, you know, you've got the larger economies are the natural ones to do it, regardless of the population makeup. The likes of Nigeria, Morocco, Egypt, etc. From a retail perspective, I think the reality is you've got to start with the Muslim population. I think you can't just go and open an Islamic bank in a country which has a very, very small Muslim population. It'll be, you know, it'll be like opening an Islamic bank in Brazil or wherever. You've got to start with that core retail demand. Now, the reason for that is that you've got to establish yourself, and then as an Islamic bank, and then start catering to everybody else, start playing on a level playing field with other banks. So from that perspective, it's really, you know, as was mentioned, Egypt, I would say Morocco, South Africa to an extent, there are already Islamic banks, and then you've got, you know, the likes of Sudan, etc., who, you know, there are again sort of Islamic banking is present there, but I think that's got to be the basis.
I think I'll just add to that in terms of capacity building, the government of Kenya signed a memorandum of understanding with the state of Qatar in December 2014. And part of that was to establish the Nairobi International Financial Center and to grow Islamic finance in Kenya. And where East Africa is concerned, Kenya is probably developing in this sector quite far ahead than the East African counterparts. So for example, Tanzania does have a Muslim population, but I think the marketing is not, has not been to that extent where they are able to open more banks in Tanzania. Uganda, for example, there is no Islamic banking there, but they have come up with a legislation that is awaiting final approval from Parliament. So when that legislation is there, you will probably see banks in the region opening up there because of the legislation that is in place. So I think that's as far as East Africa is concerned.
That's the interesting bit. So Uganda did an RFP, I think it was 2 years ago.
Yeah.
Any other questions, closing thoughts? I have Atik's permission. Thank you very much. Thank you for being part of it. Thank you.